you can see here that I measured the distance from the bottom of the teacup to the top. And so that was, let's see, 44, I think, dollars and 67 cents, the distance. And in percentage terms, it was an increase of 1,250%. So if you take 50, the objective on the upside, because the objective is the same, the market is supposed to move the same distance of the depth of the teacup once it breaks out. Well, if you take 50, it's $625. If you take 51, which is a little more exact, it's 637. So anywhere about 600 would be the objective. So if you extrapolate from the breakout, I get a objective about 4,000, and here we are at 4,200. So to me, it also says, and this is a separate analysis here, it's more about gold. It says that gold is really strong and that we could keep going forward or going up a lot more. This is a monthly chart, of course.
On November 29th, 2025, spot silver closed at $56.40, definitively breaking above a 45-year teacup and handle formation. This is one of the rarest and most bullish technical patterns in market history. Using standard technical analysis, the price objective is calculated by measuring the depth of the teacup. From bottom to top, that's an 1,150% increase. Applied from the $51 breakout level, this projects a target of $600 to $637 per ounce. Interestingly, this aligns with Cliff High's long-standing prediction of $600 silver from 2006. The timeline can be estimated by comparing to gold's recent teacup breakout. Gold's formation took 13 years to build and broke out in 2024. It's moved 7 times faster since the breakout than during formation. Applying this ratio to silver's 45-year pattern suggests approximately 6 years to reach target. However, given the massive suppression silver has endured, the actual timeline could be significantly shorter. Gold provides additional confirmation. Its technical objective was $4,000, but it's already trading at $4,200, suggesting these formations may underestimate actual price potential. Silver could similarly exceed $600. Despite the CME trading halt that many suspect was designed to slow silver's momentum, the breakout held. This represents a fundamental shift in precious metals markets after decades of price manipulation and patience. Subscribe to Fine Metals for latest gold and silver market analysis.
Of the mother of all teacups, right? A 45-year teacup and handle formation, which is really bullish. It's very rare formation as well in silver. And on Thursday, we're trading just above 51. I think we're 52, 53. And I said, if we can close out the month, how long is it going to take? Well, that's where the gold teacup comes in, because I think we can try to extrapolate from that one. And the gold teacup is a shorter one. Of course, it's from the high in 2011, just above 1920, and the high in 2020, just above 2000. I think it was 2070. And the teacup was the consolidation we had from 2020 till last year in April, I think, or March, when gold took off and broke that the top of the teacup and really went bananas, and we're still going bananas. But you can see that gold went up while the distance from the bottom of the teacup to the top is 89%, or $933 above this level. And of course, we had 2 days to go, and 2 days in the silver market can be a long time. It gives the bullion banks a lot of time to come and smash it down. But the price action yesterday was stellar. And silver closed, the spot silver that is, at 56.40. Despite all the shenanigans on the CME, yes, they're going to say it was a glitch, but I don't buy into it. I think if they hadn't had that glitch, silver would probably be even higher, probably be around 60. It gave the bankers a little bit of time to try to fix things, and still they couldn't. So we've definitively closed above this line in the sand, and it's very bullish. Yeah, who knows, in the short term we could come and retest that line, but I think we did that already after we breached it in October and came back to below 46 in the last few weeks. But the reason I'm looking at gold is because if you take 13 years, which is what it took for this formation to build up and then break out of, and you divide it by the amount of time that it's taken since last year, it's been less than 2 years, so it's about 7 times quicker than it took from 2011 to 2024. So I did the same calculation. So 45 years, the silver teacup, 7 times quicker would be around 6 years, just over 6 years. But there's one caveat. The teacup in silver has been so massive, and they've manipulated and suppressed the price for so long that the pressure is so huge that I wouldn't be surprised if it takes less than 6 years for us to go to 600 in silver. I can't really tell you the exact amount of time, of course. I don't have a crystal ball. I'm just like speculating. That's what speculators do. They kind of look forward and try to see what's going to happen by looking backwards a bit as well. So yeah, that's what I see. And the fact that it looks like gold is going to breach this objective of 4,000 and keep going could be the same thing for silver. So 600 might not be, well, it might be the objective for the teacup, but it might not be the end for silver, i.e. it could go a lot higher, and it's going to be interesting time. I could have given up on gold and silver many years ago, but I've been sitting through it since 2002, and especially after 2011, and especially around the time of 2017 all onwards, when you've had all this narrative about Bitcoin and crypto. I've known of many people, I won't mention names, who abandoned silver to go into Bitcoin. But no, I'm going to stick to gold and silver. And again, yeah, keep an even keel. Don't get too excited and don't get too despondent about the markets. And yeah, enjoy life as well. More immediate things. And I did a video. When was it? Yeah, well, I mean, it was on Thursday, so not long ago, that silver had breached a major line in the sand. And what's that line? Well, I'll bring up the chart.